Hello again, everyone. This is Joe Hentges with Beyond the Chart. In this Asia update video, we're going to take a look at China, and we're going to look at the China Shanghai Composite, the Shenzhen Composite, and the Hang Seng, Hong Kong's Hang Seng Index, and talk a little bit about why I think China may be about to break down. So stay tuned. All right, let's start off here with the Shanghai Composite. The last time I talked about the China update was January 28th. I believe that was a Saturday. I'll have to go back and check, but it was January 28th when I put out a video. It was actually a combination of a technical analysis of the market video with a look at China. So what has China, the Shanghai Composite, what has it done since January 28th? So believe it or not, I mean, we had this move up, then sideways, and then we've had this collapse here in the last week or so. And we are literally up 14 points since that point over here. And I think it was the last day of trading. Let's see. Let me double check that. No, that's right. I had to do another look on it. It's right. We're up 14 points on the Shanghai over the last 11 weeks. And that's it. And where are we right now? I mean, this week we came down and we're right at this trend line. This is the, you say this is one time down here, two, this is the third time. And, you know, this whole picture is a very flat, overlapping picture of a rally. This does not look impulsive to me at all. And that is why I am totally expecting this thing to break down in a third wave. Actually, I believe we're in a third wave, and you can see the kind of strong moves that we're getting. Now, we'll see what kind of, we need to break this trend line to the downside. Let's take a look at the weekly chart real quick. Here's the picture on the weekly chart. You can see it was down almost 73 points for the week. And yeah, it's been a very flat kind of rally since the beginning of 2016. And now it just looks to me like the next move down in here is going to take out this trend line, and I'm expecting this to accelerate to the downside. All right, let's take a look at the Shenzhen, which is kind of the, I guess they think of it as the NASDAQ of China. Now here's the daily chart of it, and you can, let me zoom out, you can see this a little bit clearer. You can see that this sideways movement on the Shenzhen is much more of a rising wedge, okay, versus on the Shanghai, it was kind of like a channel, just a very shallow rising channel. This is a clear rising bearish wedge, and it broke down out of it in December. Let me get the count. You can see right in here. It was early December when this broke down out of it. And now we've bounced back into March, and now we're rolling over again in terms of the move to the downside. So I'm expecting, just like on the Shanghai, I'm expecting this to start to accelerate. Here's the picture for the week, down 66 points. Trying to see it's hard to tell. The moving averages are kind of laid. What you're looking at in here, they're laying on top of each other almost. This is a 10-week exponential, and then the 21-week moving average, simple moving average. Okay, so that's what I've got in here. Trying to think if there's anything else. I expect the next target point is going to be this low that was achieved here in January, but I'm not expecting that to hold because I'm expecting this to keep pushing down and go much further to the downside. Let's just for grins, let's take a look at where C, if we call this ABC, where would C equal A? C would equal A in a move all the way down here to below 1400. Okay, so that is totally reasonable. We'll just have to watch the wave counts in here and see what happens. All right, so that's the Shanghai and the Shenzhen. Let's take a look at the Hong Kong Hang Seng Index. You know, and the other thing going on with, you've probably seen some of this in the news, is the collapse of iron ore prices that has occurred. And it's been a pretty big collapse that's happened just recently. And there's a lot of ramifications related to that. And I think that's affecting things and kind of signaling some things going on with the economy in China. The Hang Seng Index, this is holding up a lot better and stronger than the either the two indexes that we just looked at. but I still think that this is a counter trend move. Okay. And just by the way it's looking, we got a little bit of the overlap in here from this wave. So you really, in my mind, I can't count this as 1, 2, 3, 4. 4 is not supposed to overlap 1 in Elliott wave. Now, it becomes a little clearer when you come on over and take a look at it on the weekly chart on the Hang Seng. This is pretty gappy in here. So if we look at it on the weekly chart, this is the picture I'm looking at, and we've got this trend line. Now, it hasn't broken down below that 10-week moving average yet, so, you know, it's still hanging in the short-term trend to the upside, but I'm expecting it to roll over at any time. When you come back out, the reason I've got this perspective that instead of trying to be bullish with this move, that looking at it as counter-trendish, is because of the big picture on the Hang Seng, and I've talked about this before. I believe that the market had a major move from 1982 all the way up, and this peak was in 2007, that there was a major 5-wave move that occurred, and that the big financial crisis sell-off was the first wave down, and then we got this B counter trend move. And you can see that the whole 2011 into 2015 move, that was all broken here in 2015 with the big collapse that happened in China, the big sell-off. And so now we had this big thrust to the downside, breaking that trend line. I think this is counter trendish, and I'm watching for this to roll over. So that's the picture. That's my perspective on the Hang Seng. I think that they will most likely all get in sync here fairly soon, and we'll watch to see you know, how iron ore. And I'm also going to be very tuned into the Baltic Dry Index. It is starting to hit resistance, and watching to see if it starts to roll back over again to the downside also. All right, that's it for this video. If you felt like the video was helpful, hit the like button, and if you can think of one person who would benefit from the video, share the video with them. Social media, email, you can always just copy the link to this video and send it to someone. And if you'd like to get more insight, trade ideas, and education, become an Insider member. Click on the image on the screen and it'll take you over to the website. All right, everyone, have a great weekend. Talk to you on the next video.